Bhanu Baveja, Global Head of Emerging Market Currency and Strategy with UBS, joins us from London. Bhanu, good morning and thank you for joining us. Bhanu, what do you make of RBI measures till up until now? They have failed to stem the rupee volatility. Why do you think Reserve Bank of India has failed to curb the rupee volatility?
The failure isn't surprising because the problem in the economy, of which rupee is only a manifestation, has got nothing to do with monetary policy. It has to do with policies that the Ministry of Finance and the government as a whole has followed over the last several years. Monetary policy can try and limit the damage, but it can't fundamentally fix the issues. The issues are ones of competitiveness. Issues are ones of very high wage growth in a setting of low productivity, and that's not something that monetary policy can address. I mean, in the context of what has happened in India, I think the RBI has done a very good job. Unfortunately, it's not enough.
Bhanu, hi, morning. So what's your view of Fed tapering program in the month of September and the impact it can have on emerging market currencies as well as equities?
Yeah, it's a very important question. Look, I mean, emerging markets is a big place, and it can have a positive impact on certain markets if we assume that the Fed tapering is coming on the back of much better U.S. growth. For markets like Korea, Taiwan, potentially Mexico, it can be quite positive. For places where the savings investment gap is quite high, like India, where basically the current account deficit, also the fiscal deficit is quite high, Turkey and South Africa, the story is very different. For them, the Fed tapering program, whether it happens in September or December, I don't think is a material difference. It can give you a little bit of a relief for a couple of days if it's in December rather than September. But the point is that as Fed, as Fed rates normalize, as the back end normalizes, slowly, even if unsteadily, you will find that these countries come under greater strain because quite simply, they need global savings now. They need that liquidity to come in today to be able to finance their deficit. And as the opportunity cost of capital rises, which is a very fancy way of saying as US rates rise, those savings are going to become harder and harder to come by. So that means more pressure for places like Turkey, South Africa, India.
Bhanu, what levels do you see the Indian currency will finally settle? What could be a near-term support for the Indian rupee?
That is a difficult question because I think we are getting unanchored. I certainly don't think the market is short the currency, so I'm not looking for a major squeeze. I don't think that this is anchored properly. I think this can go towards 64, 65 over the next 2 to 3 months and potentially beyond that. I mean, the US Fed policy, as you suggested, is quite important, and whether it continues from there. If Fed rates stabilize, then perhaps the Indian rupee can stabilize around 65, 66. But another major call that I don't think people are paying a lot of attention to is Europe. What happens with European exports, or I should say exports to Europe? What happens with demand in Europe in terms of gross fixed capital formation, in terms of their credit formation? If banks in Europe are not sorted and Europe genuinely gives a sub 1% growth as a matter of trend, then we haven't seen the worst of the situation in India, because we keep speaking about imports, gold imports going lower because of government efforts and so on and so forth. The real issue is lack of competitiveness on exports, and that's where the call on Europe is, if anything, more important than the US.
Bhanu, since it's a proper macro scare and Indian markets are going through a process of macro derating, how worse do you think Indian macros could get from here? And do you think we could also be staring at a sovereign downgrade?
Look, I'm quite surprised that the sovereign downgrade hasn't happened on pretty much every economic metric. It should have happened, so perhaps it's not just economics that's relevant out here. I think the possibility of a sovereign downgrade is high, but I would have said that 6 months back as well. It hasn't happened yet. I think the markets are running ahead of the rating agencies, thankfully, out here. There are other markets in EM, by the way, Turkey, for instance, which has, if anything, worse external fundamentals than India does, and that also is at investment grade. I think both these economies, perhaps also South Africa, are at risk of getting a downgrade. How far can the macro worsen from out here? Well, you've come down a long way. It's been a huge fall from grace. But But I think it'll be naive to say that this is the absolute bottom just because we've come down a long way. So I think one of the big problems in this market is that many folks think in terms of mean reversion. Just because the market's gone down, it can go up, and because it's gone up, it can go down. I think it's important to understand when there is a structural break, when there's a trend break, and I think India's potential GDP is coming lower. And at this minute, even if I look at the cyclical indicators, I don't see huge signs that there's a big turnaround in investment sentiment. Many people think that next year's elections we'll have to wait to see what happens at that time. I agree with that. But what I don't agree with is that the elections in themselves are a sufficient condition for turning the economy around. You need to see better policy, full stop. You need to see labor market reform. You need to see opening up of certain sectors, which the government is finally trying to do, but I'm afraid it's too little too late.
Bhanu, how difficult could the weakness in the currency make financing the current account deficit by the government?
Well, I mean, that's the fundamental question. It can make it very difficult because, the funny thing is that everyone is now very bearish in India. No one is short India. In other words, people are long in the equity market. When I say people, I mean specifically foreign investment, because that's what's relevant for financing the current account, not the local investment. Local mutual funds, I don't think, are very long on equities, but that is a function of the fact that they don't see many inflows into the equity market, into their own mutual funds. So locals are not long, but foreign investors are very long India. And I think that that's a risk. So if they feel that the weakness in the rupee is a trend rather than just a short-term blip, I think that some of these guys will stop sending money into India. Some of these folks will stop investing in Indian equities, and you might see outflows. So the financeability of the deficit, I know this gets slightly circular, but that is the situation India finds itself in. The financing of the deficit is going to become very problematic if the currency continues to go from here. And look, it's been depreciating since 45. We've come all the way to 61, 62, and for the longest time, it really didn't matter for equity investors. So clearly, there's a switch beyond which people have begun to get worried more, and I think that switch has been thrown now. Further weakness is going to evoke a much stronger reaction in the stock market than it has done in the past, and today's price action was a classic case in point. Today, for the first time in a long time, it felt like there was panic.
Bhanu, outlook on what is your outlook on Indian equities in this kind of a scenario? And do you think the big potential risk for Indian equities now could be FI outflows?
As I said, the risk is quite high because India is one of those markets where you could see a vicious cycle develop between the currency and the underlying asset, which is in India's case equities. So I think that risk is a significant one.
Bhanu, how serious is the scare on the growth front for the Indian markets in your view? How much lower can we go looking at the overall scenario? Could a 3 to 4% GDP growth as well be a possibility?
It is a possibility. I mean, we don't think that it's very likely. I think consumption in India is still reasonably strong. They've seen an above-average monsoon, so that should support consumption. Although it has slowed down from earlier levels, but in the absolute, it's still reasonably strong. So we would put it closer to 4.5 to 5%. But certainly, there is no turnaround in business sentiment, and I think what happens in the external sector is going to be crucial. The good news is that the trade deficit seems to be very slowly coming in, so that should also at the margin support growth. So our forecast is not for 3%, our forecast is for higher, but make no mistake, it's a big fall from grace.
Right, Bhanu, really appreciate your time and thank you for joining us.